Hello, my name is Dale Jannels. I'm the Managing Director of Impact Specialist Finance, and I'm very grateful to be involved in Pepper's adverse credit study. They've asked me a few questions to go through, and I will put my views and thoughts towards these. And first of all, why do you think studies into adverse credit are important to the specialist lending sector? I think it's because it's an unknown entity, and following recent events, I can only see this really increasing. The report states that over 2.1 million people missed a payment in the last 6 months, and half of those were multiple missed payments. And now more than ever, I think it's a massive opportunity. People need our advice and our guidance, and they may need to understand specialist lending, because there's a lot of people that understand the high street guys, the household names, but they may not actually understand that there are specialist lenders out there who can help them, especially in the short term, if they've had credit blips and a way back to getting onto the high street. What can brokers learn from this study on adverse credit? Simply, it's a huge opportunity to help out clients. There's a lot of people looking out there for assistance. And as a broker, we can't rely on the high street any longer. This is a huge opportunity to learn about specialist lending and be involved with someone like Pepper and Impact Specialist Finance, who have been in the market 28 years to help your clients. If you don't go looking for it, that sort of business in the adverse sector looking to help clients, other brokers most definitely will be. And right now, like I said, we've been around a long time. This sector has been around a long time, and it's not going anywhere soon. And in fact, over the next few months, with the changes of technology and so on, I can see this being a very, very valuable part of the broker's armour when dealing with clients on a day-to-day basis. What can lenders learn from the study on adverse credit about the impact on end consumers and their applications? Simply that people have blips and occur circumstances out of their control. COVID is something that's totally out of all of our control. If someone has been made redundant or they missed a payment just purely out of circumstances, I think when it's a one-off, these sort of things should be looked at and looked at as such. A bit of understanding why the client had the adverse, especially in the current climate. Try to be forgiving and assist where possible, because there's a lot of people out there that need assistance and need help. The other part of that is lenders should be working together to cater for these areas of the mortgage market. It is going to be a growing sector. The survey shows it's going to be a growing sector. And like I said consistently, right now, customers need our help more than ever. What is a misconception about adverse credit? This study has helped me understand. To be honest, I've been in the industry 21 years. These stats don't surprise me. It's great that 66% of those surveyed would seek advice from a mortgage broker. I think right now it is a very specialist entity. And even just a small default, small missed payment, small CCJ, is something that a professional advice should be sought for. This is reality. I can only see this increasing, especially as we come to the end of the furlough period. We're going to see a lot more people lose their jobs, unfortunately, and that may well mean that they don't pay all their bills on time, and as such fall into the adverse type category. But are we doing enough to reach out to the consumer and actually educate them that these types of deals are available? So I don't think at the moment, I think a lot of customers bury their head in the sand and hope that the debt will go away. But of course, these can mount up over time and actually become a bigger debt than when they first set out. But also the reality is there is not a massive amount of difference in cost between a high street deal and an adverse entity. And I think that's the part of the education that we need to speak to consumers about to get them to understand that there are options available to them. And that has to be coming from A, the lender, but also more so B, the broker, when actually looking for this type of deal. What is the most surprising statistic I've discovered in the adverse credit study? I think for me, probably that the statistic that stood out to me the most was 69% of people think getting a mortgage will become harder due to COVID. I'm not sure I agree with that. I think income will obviously be a major factor and affordability will be tighter, but I don't think mortgage will become harder to get. I think right now lenders do need volume business. They do need to help clients. They do have effectively 4 or 5 months worth of business to catch up on. And therefore, I think actually, I don't think it will become harder. I think it will become more challenging, I would say, in that affordability will be the major factor. Like I said, I think if your income is decreased, in that respect, yes, it will become harder. Generally, if you had adverse in the past, I think it will become easier. I think lenders now are catering for that entity. 48% of people also sort of back that up in that if they've experienced adverse in the last 3 years, they said it did not affect their ability to obtain finance. And why should it? If you had a blip, if you had a missed payment in the last 3 years, it's not current, then realistically, I think that should be something that lenders can help with. I think this is great from Pepper that they've done this study with YouGov. I think it's a good number of statistics that we can all work towards helping customers. But I think, like I said earlier on, education is key. Getting out to the end consumer and giving them the understanding that they can actually get a mortgage and not to shy away from trying. Thanks again for the opportunity. My name is Dale Jannels and I work for Impact Specialist Finance. Many thanks.